Hi guys, in this video I'll run through my portfolio update for January, including how I beat the S&P 500 by about 10%. Hi guys, hope everyone's safe and well. As always, please remember that this video and its contents are not to be considered as financial advice, they're my opinions only. Okay, so if we do a quick run through of the portfolio for the month, I'll run through the stats and some of the top performers for the month, and then I'll give you a quick overview of this week just past. There's obviously been a lot of news, a lot of volatility, and then I'll cover off the open trades for the week. So the stats for January, we're up 9.74%, which is obviously a great start to the year. If we see how the S&P performed for January, so you can see it's down 1.111%. So, almost 10% on the S&P for the month, which is obviously a brilliant return. So there's been a lot of volatility in the markets this week for a few reasons. Obviously, the well-documented battle between Reddit's Wall Street Bets and the big hedge funds. Although I'm sure the big hedge funds are still making a lot of money, even though you might not think they are out of this situation. Don't believe everything you read on that one. But yeah, there's been a lot of obviously news around that, and it has caused a lot of volatility. It doesn't directly impact us. We've not got many the stocks that are getting sort of pumped up in that respect. We do have Nokia in the portfolio, which I'll jump into in a little bit more detail. That had, I think it was probably about 40% spike at some point during the week. But we've got our own reasons for the holding that, and that's nothing to do with the sort of ongoing saga between, I guess, the way it's been promoted as the average person against the big hedge funds. So we're not really affected by that, but it has caused volatility in the markets. People have probably sort of dived in and out of positions, moving funds about if they are getting involved in this sort of this battle, as it were. So it has caused a lot of volatility, but I think the main reason really has just been because it's end of the month, end of the week. There's been a lot of profit taking. We've had some earnings releases. We've got to continue to get more earnings releases from some of the big companies over the next few weeks. So people are probably just sort of repositioning themselves, taking some profits. Like I said, even though we are up just under 10%, I think at one point this week, or beginning of the week, we're probably up over 10%, more like 11%. So there's definitely been a pullback across the board. It happens. End of the month, 9 times out of 10, you'll get people taking profits. So, we're in this for the long term. We're not really concerned on the daily and weekly movements as such. Not when it comes to daily and weekly movements across the board. If it was in particular stocks, then obviously we'll pay attention to that. But because it's across the board, it's not really anything that's worrying me. So if we quickly cover off the stats for the month, so I've mentioned we're up just shy of 10%, or we closed just shy of 10%. If I go through some of the trades, so we had 22 trades closed, 86% of them were profitable. We had a realized return of 9.55% for the month. So that's realized profit in trades that we've closed, which is really good. The top performers, I think the top 3 for the month, obviously Jumia, which I posted a video on last week. We had a 700% gain on that one. So if you want to know a little bit more information about my feelings on that, there was a video that I posted last week. You can see that on my YouTube channel. So that was our top trade, really. Others include Santander, which was closed at a 60% profit. So it's this one here, just over 60%. China Oil, we closed for about 43%. So those were the biggest ones of the month. And then there's quite a few others that were sort of between 10 to 20% returns. So it's been a pretty good month, I'm not going to deny. You sort of take 10% a month without doubt. So hopefully we continue in that vein. We have opened some new positions this week. We closed one position this week, which was ZTO, the Chinese delivery company. So we closed that position out. We've opened some new positions. I'll quickly run through those now. So one of those is Nokia. Now we have already got a position in Nokia in the portfolio. That one is one that we've opened a while back, and it's actually, the position is opened on the Scandinavian exchange. This one I've opened on Friday, was actually opened on the US exchange. So the reason I'm quite bullish on Nokia is a number of things. I'll go through the technicals in a second, but it's a stock that's been quite heavily beaten down for a while. Obviously, from a technology perspective, it's been left behind, for years when it comes to the smartphone industry. But it's really sort of positioned itself and is positioning itself positively in the 5G and 6G space, like from an infrastructure perspective. So there's a lot of releases, a couple I've posted on my Etoro profile actually, of partnerships that they're making with key, large global corporations. So this one, for example, it's teamed up with Google to develop a cloud-native 5G solution, which is obviously, quite a big move. There's more details on that on my page. It has taken on big projects, big 5G and 6G projects in the EU, which sort of strengthen its position when it comes to that sort of sector. It's working with companies like Intel, Qualcomm, O2. So I really think it's, in the coming years, it's going to be a strong player in the 5G and 6G space. So that could have a significant impact on some price appreciation for the stock. So just from like a technical perspective, this is on the weekly chart. We've seen it's been in a bit of a downward slope for a while, but the last few years, you can see it here, it's sort of trending downwards. We've had a bit of a bounce here. It looks like it might be starting to bottom out slightly. What looks like here potentially is like a head and shoulders pattern forming, maybe, with the left shoulder here, the head, and the right shoulder. But I just feel like with all of the fundamentals that are moving in the right direction, we could see this one push up quite significantly. Obviously, I mentioned it or alluded to it in the first part of the video. One of the stocks that had been sort of targeted by Wall Street bets was Nokia. Not as much maybe as GameStop and the others, but this one, I think it probably jumped. I think it was about 40 to 50%. It jumped over a couple of days. So you can see the massive spike up here, and then it's closed all the way back down here again. So, that's not why we've jumped in the trade. We've got other beliefs in the company. So I do think, though, that we could see it pushing up at least to sort of 6.5, maybe 7 in the next sort of 6 to 12 months. And then depending on how things progress in the 5G and 6G space, it could start trending higher. So it's one that we like. It's one that I think is moving in the right direction. I think they've targeted an area that they've had some considerable strength in, and they're looking to build on that. So that's one that we've added to the portfolio. Another company that we have added is Kia Group, which is the UK construction company. Again, this one's a bit of a depressed stock. It's been beaten down for a number of years. I think sort of going back to 2018, 2019, when they had to, when they revised down all of their sort of forecasts, their revenue forecasts, they took an absolute beating. It's a company, they've got a lot of debt, and they're not financially, they're stable, but they're not financially in a great position when it comes to their debt. So I suppose you could see this one as a little bit of a risk, but they've recently taken on a lot of big contracts. So they've just taken on a £200 million contract with TfL to service and maintain their tunnels, a lot of the tunnels and bridges that they own. So I think that's a £200 million contract over 8 years with the option to extend for another 4 years. So that's a huge contract for them. They're also involved in HS2, the railway, the big sort of government railway project that's been taken or is being pursued. They've taken on, even over the last week, they've taken on sort of multi-million-pound deals for constructions of new hospitals. So they're really sort of winning some big contracts, which I think will help them to sort of service their debt. And they are starting to knock that down. So even though it is a company that's been sort of, the stock price has been languishing for a number of years, I do think we could see this one sort of make a bit of a recovery. And from a technical standpoint, if we dive into it a little bit deeper into the weekly chart, you can see it's sort of been ranging between 150 and sort of 75. It dipped below it, had a strong reaction above it, and now it's sort of back above it again. And then we've got this bullish engulfing candle here just above support, so we've jumped in on that. I do feel like it could bounce around sideways for a while before we see it slowly. You know, if it breaks out of this, I think we could see it move significantly higher. But yeah, the fundamentals are starting to support a bit of a recovery. So that's one we did take a bit of a jump on. Not a massive amount of risk for the portfolio because it was only 1.5%. So, you know, one that we'll probably hold on to for a while. And then another stock we've opened a position in is Trig, which is a UK investment trust which specifically invests in the renewable energy sector. So, you know, this one has been trending since about 2016. It's been on a fairly consistent trend line. Yeah, just sort of end of 2016. So we've opened a position where it's been sort of consolidating for the last few weeks, sort of packed in consolidation just on the trend line there. And there's been bullish reactions on this trend line every single week near enough. So we've taken a position in that, looking for it to sort of retest up to sort of 150 in the sort of midterm, and then maybe breaking into new highs after that. So that's another position we've had. And then the final position for the week is in International Consolidated Airlines, which is the holding company for brands such as British Airways, Aer Lingus, Iberia. So a lot of the big airline companies it owns. I wanted to get involved in some recovery stocks. A lot of people already are starting to shift from tech to value stocks. So this is one that, again, this is really sort of beaten down stock. And I think the brands that are in this company are really strong. Financially, the company's said that it's stable until at least the end of the year with minimal air travel. And I think we'll start to get a recovery before that. So I've sort of dipped my toe in a little bit with this one. But I think it could pay off quite nicely if it does come in. So from a technical standpoint, it did break lower a couple of months back after it did a stock split. A share issue to try and raise some more capital. So it did break lower, but now we've sort of bounced back up, and it could be starting to form again another head and shoulders pattern here, or it could be a double bottom. So you've got this sort of support area here it's touched, and then you've got the head there that it's touched, and then it could be, if it bounces around this range here, it could be another shoulder. So, you know, we could be looking at 328.80. So it could be sort of heading back up if we do start to see a recovery and the vaccines start kicking in and people can sort of, you know, release that pent up frustration of traveling abroad again. We could see this one have a significant, you know, ride higher up until, where are we? Probably, you know, the 500 realm. So that'd be a really good return. You know, it's probably going to be choppy. There's going to be a lot of volatility, but I just think now could be the right time to take a little bit of a small risk. Again, nothing too major, 1.5% of the portfolio. Take a little bit of risk, and then this could be a nice return on this one. So that's the last stock that we've had of the week. So as you can see, it's been a great month, a nice solid just under 10% return, which, you know, we've outperformed the S&P500, which is brilliant. And all of the positions that we've got open at the moment, I'm fairly happy with. They're all moving in the right direction. Yes, there's been a bit of volatility. We've had a pullback this week, but it's all to be expected. You know, I'm remaining fairly calm about everything and happy with where the portfolio is going. So hopefully that will continue in the coming months. If you wanted to ask any questions about any of the stocks that I've got, or, you know, have an opinion on on the portfolio, then please comment. either on my YouTube channel in this video, or you can follow me and comment on my page on Etoro. There's a link in the description. If you did want to copy the trades that I open and close, then you can do so on my Etoro Portfolio. Again, link is in the description. If you want to stay up to date with my thoughts on the market and my portfolio updates, then you can do so by subscribing to my YouTube channel.